Behind every monetary policy decision lies a story of strategy, data, consumer behavior, and economic impact.
Achieving macroeconomic stability requires sustained vigilance and a proactive monetary policy stance. Our focus must remain on price stability, the planned transition to an inflation targeting framework, and strategies to restore purchasing power and ease economic hardship.
Welcome to Facts Behind the Figures, the program that decodes the data and dissects the decisions shaping our economy. Beyond interest rate shifts to inflation targets, we go behind the headlines, spotlighting the rationale, the stakes, and the signals behind Central Bank of Nigeria's economic policy decisions. Not excluding your views, of course, as we navigate these economic and financial terrains. This is Facts
Behind the Figures.
Insight, analysis, clarity, facts behind the figures, where policy meets perspective.
In February, the Central Bank of Nigeria, CBN, held its first Monetary Policy Committee, MPC, meeting for 2025. At a World Press briefing following the two-day session, CBN Governor Olayemi Cardoso announced that the nation's monetary policy rate, MPR, and all accompanying parameters would remain unchanged. The MPR closed 2024 at 27.5%. The cash reserve ratio, CRR, stood at 50% for commercial banks and 16% for merchant banks. The asymmetric corridor remained at plus 500 minus 100 basis points, while the liquidity ratio was maintained at 30%. Governor Cardoso explained that the MPC's decision to retain the current rates was largely influenced by inflationary pressures, among other economic indicators. This program, Facts Behind the Figures, is an analytical deep dive into the impact and implications of the CBN's policy stance. We will explore these decisions through sentiment analysis. Following the decisions made at the 299th MPC meeting, the CBN allowed time for the news to settle before engaging the public via its social media platforms. Through a series of LinkedIn polls, the bank gathered thousands of responses to gauge public sentiment around the clarity, impact, and effectiveness of its policies. One standout question: is the CBN fulfilling its role as a regulator? Received the highest engagement. Out of 533 votes, 60% said yes. Encouraging, yes, but the remaining 40% suggests that there is still room for improvement. Additional insights revealed 67% felt the CBN's messages were clear and timely. 55% found the communication informative and engaging. 63% said they understood the MPC's decisions, but only 34% actually read the official communique. Based on the feedback gathered, several key suggestions emerged. Strengthen inflation control, especially through agricultural reforms. Reduce excess cash in circulation using structured liquidity controls. Simplify banking, enabling account upgrades without opening new accounts. Improve purchasing power to enhance food security and public health. And communicate better, not just louder, but clearer. As a people-centered institution, the CBN values public input. So we now take it to the streets for a vox pop to hear directly from Nigerians about their understanding of CBN policies and their suggestions for economic growth.
So I feel that maybe in a way to captivate the young generations, they can go through a sponsored ad or newsletters, which is something you're scrolling on your Facebook and you can actually see it, can bump into it. So I feel like it should be done that way. That's will communicate better to the young generation?
Typically, the average professional will know what it means, but then for the man on the street, he doesn't understand what the CBN is trying to do. So I think whenever there is a pronouncement on, for example, the MPR, it will make a lot of sense for CBN to explain what it's trying to achieve by any policy, any directive they bring out on monetary policies. And I think also it would be very good if we could begin to catch them young and educate the younger people.
Monetary policy is what affects every Nigerian in Nigeria, and a larger population of this includes also the informal sector. And from the communications we've had, from the MPC and the MPRs and all of that, these publications are mostly, published on the CBN website. So what I would recommend, especially to cover the informal community, would be to leverage. They have cooperative societies. We can leverage that. A lot of them actually listen to what their cooperative leaders would say, especially, for example, you can have farmers, you can have welders and all of that. And then also the local chiefs in these areas. We can have a one-on-one session with them to brief them that would like to come and speak to them in their local language.
So, where do we go from here? The public's message is clear. Talk to us in ways we understand. Break it down. Bring it closer. Let's get more recommendations from financial experts.
With regards to the MPC's impact on the economy, some of these decisions the impacts don't reflect almost immediately. You are addressing a particular problem. It's not magic that once you come up with a policy, you expect those things to start translating to positive outcomes immediately. But over time, like in the case of inflation, while inflation is growing, you can see that it's not growing the same way as the figures show. Month on month, it's coming down, but year on year, we are seeing a difference, which means that the MPC decisions are actually working very well.
The MPC policies are good in the sense that the members of the committee take time to review the economy at every point in time before they arrive at their decisions. But I think that there is need for the committee to put into consideration the fact that the interest rate is very high. And in an economy with a very high interest rate, it makes money very expensive. And because money is expensive, people are not able to borrow. And if people are not able to borrow, it definitely affects performance. So I will expect that as the committee meets next time, that they will look at it more closely to see how they can reduce interest rate as it is done in several other places across the world.
While adapting and improving how it communicates, the CBN continues to build public trust through expert engagement and knowledge sharing. Let us move to a segment where our financial analyst, Mr. Enita Loniran, will further break down the implications of recent policy decisions.
Let us look at the issues around the economy with me, Enita Loniran. In recent periods, the Nigerian economy has been confronted with several challenges. The big question is, are the Central Bank of Nigeria policies heading in the right direction to support achieving price stability and ensure that macroeconomic stability overall is achieved? Yes, the Central Bank of Nigeria's decision to tighten monetary policy rates and maintain cash reserve ratios at 50% are in the right direction. The recent effort by the National Bureau of Statistics to rebase the Consumer Price Index and the Gross Domestic Product of Nigeria are also in the right direction to ensure that the Central Bank of Nigeria and the federal government have the right adequate information to make policies in the right direction. We have seen that in 2024, the reserves grew to a recent time high of $40 billion. thanks to higher oil exports and tighter FX policies. Also, we have seen improvements in the remittance inflows into the Nigerian economy from Nigerians in diaspora. The recent tariffs by the US government on most countries across the world. Nigeria's trade with the United States is less than 10% of Nigeria's aggregate external trade. As such, the direct impact of the tariffs may not be well pronounced on the Nigerian economy. However, there are several indirect channels through which this tariff would impact Nigeria. If the US economy slows down significantly, it has the prospects of driving the global economy into a recession. Through that channel, the oil price, that is Nigeria's major exports and which accounts for the bulk of the government revenue and external earnings of Nigeria, become vulnerable. To cushion this effect, Nigeria may begin to consider expanding its trading partners and diversifying its export base. This will significantly help to cushion the impact of these tariffs. However, no one knows the ultimate direction where all of this is going. Economic agents and policymakers across the world are watching how this trend would go, and the Nigerian government has equally convened an emergency economic meeting among the key policymakers across the country to ensure that Nigeria comes up with an adequate response and guide itself through this period of uncertainty.
With all efforts put in place by both the fiscal and monetary sides, as well as the trade policy, one can be cautiously optimistic about the prospects of the nation's economy. With smarter strategies and stronger engagements, the Central Bank of Nigeria is not just leading with policies, but with powerful communication, leveraging feedback to improve policy direction. Let us keep the conversation going.